How to leverage debt in real estate? Well, I'm really glad that you asked because paid off, free and clear real estate is way overrated unless you're into getting rich super slow. Now, if you like the idea of going faster, potentially much faster, there's a reason that they call it leverage, because it multiplies the resources that you already have. And I'm going to show you how to do it the right way. Leverage, in many contexts, has a negative connotation, but it is the very thing that has real estate standing on top of the mountain, having created more wealth for more people than anything else on the planet. You see, leverage is available to the average person in real estate, unlike any other asset class. At the very least, you can cut your journey to financial freedom in half. And that's a very conservative statement at that. So I'm going to go into what does it mean to leverage real estate, and then I'm going to go into two specific benefits. And the second one, nobody talks about. So first, what does it mean to leverage real estate? Well, in most scenarios, it means to borrow money to make the purchase. And traditionally, someone would walk into a bank, they'll apply for a loan, the bank will give them the approval, then they can go out and they can shop for the real estate, and that buyer, they might put 20-25% down, and then the bank will fund the rest, and now that buyer owns the real estate. Although there is debt on it, they are the official owner. That's how you leverage debt to buy real estate. Now, there's two specific benefits to using leverage in real estate. And the first one, most people commonly know. When you're using leverage, it increases your ROI. And I'm talking about your return on investment. And this is how most people see it. So let's say I've got this house. We'll just say it's worth $100,000, and you're going to put $25,000 down, and you're going to leverage the rest, meaning the bank is going to bring in the difference. They're going to bring in $75,000. You now are the owner of the house, and you get to experience all the benefits of owning a house. And one of the biggest benefits is the appreciation of real estate. And on average, real estate appreciates about 3% a year. So after 1 year, the appreciation on this property, 3% of the $100,000 is going to give us $3,000. That's how much we made on the appreciation. But what's our return on investment? Because it's not 3%, because we didn't invest $100,000. We invested $25,000. So we take the $3,000, we divide it by the $25,000 that we put into it, and our return on investment was actually 12%. This is what leverage does for us. This is what we call our appreciation profit center. And this is what I call my ROI matrix. So up here is the appreciation. And this is the thing that most people think about when they buy real estate. How much is it going to appreciate? Will it be worth more when I sell it than it is when I buy it? And you'll know this is what they're thinking about, because you'll hear questions like, is this a good time to be in real estate? And what they're thinking about, is it a low time to buy so they can eventually sell for higher? Now, the return on investment doesn't end with appreciation. There's three other profit centers for real estate. And the second one, the more sophisticated investor will think about, is our cash flow profit center. So for the sake of ease, just for this example, for efficiency, let's say this property cash flows $250 a month. Annually, we multiply that by 12, that gives us $3,000 a year of positive cash flow. So we'll now look up into the cash flow quadrant up here, this upper right-hand area, and there's another $3,000 we made. So what's our ROI now? Well, we're going to take this number, the annual cash flow number, and we're going to divide it by how much we invested into the property. We didn't invest the $100,000, right? We invested the $25,000. So we'll divide this by the $25,000, and we have an additional 12% return on investment. But we're not done. We've got two more profit centers. We've got the depreciation, and we've got the amortization. And most people don't even count these as profit centers. They're oblivious to them, because this we can kind of feel and see when we go to sell the property. This we feel each and every month because it comes flowing into our mailbox. But these two we don't feel. The depreciation are the tax benefits from the real estate. So this isn't necessarily money coming into us, but it's money that doesn't leave us. It's money that we don't have to send to Uncle Sam. So the tax code works like this. The IRS will give you a tax deduction based on the natural wear and tear of the property. And they will allow you to depreciate the structure. They won't allow you to depreciate the land that the structure sits on. They'll allow you to depreciate the structure. And so their formula is to take 80% of this. So you're going to have $80,000 that you can depreciate. And they allow you to depreciate that over a 27.5-year period. Where they came up with the 27.5 years, I don't know. If you know, let me know in the comments, but I don't know. But that's what the code says. So what we do is we divide this by the 27.5 years. And what that gives us is $2,909. That's our deduction. Now we have to multiply it by the tax bracket that we're in. Let's just say we're in a 33% tax bracket. So that gives us $960. That's an actual return on our investment. And what was our investment? That's right, $25,000. So we'll divide that by the $25,000, and that gives us another 4% return. Now the last profit center, which is actually my favorite, because if the cash flow is what's going to set you free from that rat race and allow you to live your life on passive income, this is going to give you your livelihood. The amortization, this is what's going to build your wealth. This is the actual paying down of the debt that you borrowed from the bank. And who's paying it down? It's not you. It's your tenant that's paying you your monthly rent, right? And the way that a 30-year amortized loan is calculated, you pay most of the interest up front and most of the principal at the back end. So it's going to be really minimal the very first year. I'd say maybe $1,000 is as much as you'd pay down from the debt, but it's a real return. And so what we're going to do now is, once again, divide it by how much we put into the deal. That's right, $25,000, right? And that gives us about another 4% return or so. So by using leverage to buy your real estate, what you've done here is you've created a 12 plus 12 plus 4 plus 4, a 32% return on your investment in just the first year. So how did your stocks do? How did your 401k do? Did you get 32% last year in your stocks? Probably not, because you can't leverage those. You can leverage the real estate though. Now the second benefit of using leverage that nobody talks about is you haven't used all of your money. It frees up more of your money so you can buy more, only compounding the benefit that you're getting by using leverage in the first place. Now, before I get to the bonus benefit, I didn't share this with you up front, but I'm gonna share with you a bonus benefit that almost no one ever even talks about. But I wanna know, if you are really serious about making money in real estate, let me know by clicking the like button and subscribe to the channel, because I post cool money-making stuff like this each and every week and you don't wanna miss it. Now, as a bonus, leverage doesn't just end with leveraging other people's money. You can leverage other people's time, other people's credit, other people's resources, other people's experience, other people's expertise, all of which can not only increase your return on investment, but preserve your most valuable asset of all. And if you'd like to go deeper into your real estate investing, I don't know, it might make sense for us to hop on the phone and discuss. We can get together, we can brainstorm some ideas about working together possibly would look like. If you like the sound of that, go to reiace.com. Answer a few short questions, and then right after you're done with that, you'll have the opportunity to pick a time for you and I, convenient for you. We'll hop on the phone to discuss and see if there's a good fit here. reiace.com, and I'll put the link down below in the description for you as well. So what'd you notice? What'd you learn? Share with me also in the comments below. And who else do you know that needs to see this? When their name comes to mind, please share it with them. Thanks for watching, take care, and I'll see you soon.